It's 5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Tuesday. The vote-a-rama continues. Senators pull an all-nighter on the $3.3 trillion tax and spending day bill. 8 days to go until the trade deadline. The EU pushes to negotiate while President Trump threatens to up tariffs on Japan. And an all-star lineup in Portugal. Powell, Lagarde, Ueda, and Rhee all set to speak at the ECB forum in Sintra. All right, we have a little bit of breaking news to start the show for you. We are getting Euro area prelim June consumer prices rising 2% year over year, bang in line with the estimates. It was 2%. When it comes to core prices, 2.3%. Again, that was the estimate. The month over month price for you is 0.3%. All of those within the estimate. And that is perhaps good news that it is hanging around 2%. Maybe that solidifies the ECB rate cut come September. You can see the euro has been stronger all morning. It really peaked up right before that CPI report. It's kind of hard to see on this chart, but slightly ticking down. Even still, this is the strongest the euro is versus the dollar since September 2021. In fact, it was the worst first half for the dollar for DXY since 1973. That's not what's happening in the rest of American equity. Let's look at what futures are doing this morning. Sure, they are weaker, but this comes off the back of 3 consecutive gains for the second all-time high. We're weaker by just a touch this morning, down about 0.1%. Your NASDAQ futures down 0.2%. It was also a really strong quarter and first half of the year for this bond market. The rally is continuing there this morning. We're down by a basis point for your front end. 10-year yields down by 3 basis points, just above 419, the best quarter since February and the best first half in 5 years. Let's look at some individual stocks now, including a big drop from Tesla this morning. With that is Joe Easton. Hey, Joe.
Hey, Danny. So as you say, it is a big drop for Tesla this morning, down almost 5% in the pre-market this morning. If you thought the bromance between Trump and Musk was over, well, it is well and truly now. We've seen Trump online railing against Musk, saying that he gets more subsidies than any other human in history. And those comments hitting shares of Musk's car maker today. As I say, we're close to down 5% on that one. Really, that relationship taking another downturn. Then a couple of crypto-related stocks to bring you. Firstly, Circle. Remember this one of the best performers of the year today, and news that the company could actually go for a banking charter, giving the stock the latest lift on that. So we're up 2%, extending a massive rally for Circle. Then Robinhood, also a bit of a gainer this morning. We did get news of them doing some securitization via the blockchain. So essentially, you're going to be able to buy stocks in other countries outside of the US via the blockchain. Something very complicated I probably don't really understand myself, but it does sound very exciting for Robinhood investors, and the stock gaining today. And as usual, check out the Before the Bell opening wrap on the Bloomberg terminal for a summary of all these news movers and more. Danny.
Thank you. Excellent work. We'll catch up with you later in the hour. Also in this hour, we'll be speaking to Kelsey Berro of JPMorgan Asset Management on the Sell America trade, whether it's real or it's ebbed, and Jeff Yu of BNY on the risks ahead for that Treasury market. Now, on that, Jeff writes, quote, "The rest of the year will tell, especially if the big, beautiful bill passes, how attractive U.S. sovereign debt is for investors overseas, or whether or not perceived risk remains high enough to discourage a return to the market in any meaningful way." Geoffrey joins us now. He's senior strategist at BNY. And Jeff, it was a good quarter for Treasuries, all things considered, the best since February, the best start to the year, the best first half in about 5 years. Does that suggest that foreigners are still happy and well to be in this market?
Well, they're certainly not unhappy to be in this market, and it really depends on what part of the curve you want to be in. I think a few observations, firstly around April, late April, yes, there was a lot of selling, basically the liquid parts, where foreign investors actually did own a lot, like 1 to 3, 3 to 5 years. But even throughout that period of volatility, they were buying the long dates, right? Because I think the dollar really plays into this. Again, if you're seeing where yields are quite handsome, but crucially, the dollar has come off 15, 20 big figures, well, 15 big figures against the euro. So for a European investor, that's a lot more compensation for owning this, and they feel they are adequately compensated right now. So a bit of a tailing off in flow towards the end of the quarter, but by and large, they certainly still want to be in this market.
What is the level, Jeff, that we get at for this yield that becomes attractive for new buyers?
So I would, again, combine that with where the dollar is. Let's say you get a 5% or 4.5 to 5 range, depending on where the curve is. I think whether the euro dollar is going to be at 120, versus say 105, 110, say dollar yen at 145, versus say 150, 160. These are going to be the crucial levels. But as long as the dollar limits its gains right now, I think they'll be happy with even a slightly lower yield compared to where we are right now.
Jeff, what do you make, though, of the fact that we have seen yields that have been coming in, stocks at all-time highs, credit spreads back at the tightest from May, but a dollar which cannot find a bid?
So I think the dollar is actually a cornerstone of that right now. So two reasons. One is where the Fed is going to be. I think the bulk of the market sees July as a live meeting. So that's limiting the dollar. But secondly, going back to the other asset classes, the fact that July is live and we may get 2 cuts at least for this year. So that is underpinning risk sentiment as well, limiting the tightening in financial conditions, which again is attracting international investors. And to be frank, the onus is on the rest of the world, the Eurozone, APAC, to show that they have growth. To really pull away from US exceptionalism. And so far, I think the jury is still out there.
Jeff, at the moment, as we speak, live in Washington, D.C., there is a vote going through. And you mentioned that the fiscal deficit is going to have so many ramifications for this market. But the question is when? At what point is this a bond market that wakes up? You can see the live pictures there. That wakes up to the deficits coming in. That maybe bullies this. That we see higher interest costs that have real ramifications. At what point does that really start to filter through?
So I think we got that warning towards the end of April and early May already, right? So I do think that the US government is on watch, they're attuned to this. So they want to make sure that relative to growth, and that's the key picture there, it's not about debt servicing on an outright basis, it's relative to growth. So I think it's not about the bill per se right now. The US needs to show that it can still grow its way relative to the debt. If we start to see, let's say, stagflation issues, and we've been here in the UK before, where the bond market has certainly faced more struggles, based on our data, I think that's when I think investors will start to revisit that. So I think right now it's imperative for the US economy, private and public sector, to take advantage of moderate borrowing costs, moderating inflation, to really drive that growth, drive that productivity that Governor Bailey was talking about this morning. So if we don't see the earnings growth, the household spending and the productivity growth, real income growth, then I think that's where you will see asset allocation start to rotate elsewhere.
Well, to that point, Jeff, maybe it's bad for bonds, but is it bad for equities? Because we will be getting stimulus from this bill. Is it enough to kind of supplant and get that growth engine going that alleviates some of the concern?
So I think it really depends on the sectoral, breakdown. Right now, of course, we always talk about tech. People talk about that being like a secular growth trend, investment trend, as long as an investment growth trend, as long as global investors heading into AI, heading into these sectors is there, then maybe it's a bit more immune to what the government does. But I think it's the household, it's consumption. US ultimately is less of a trade, manufacturing dominated economy, something the president's trying to change, of course, but more of a services-based economy. If that starts to wane, then maybe on the equity side we will revisit that. But for now, let's face it, the data is not showing any sign of that. But again, in terms of US equities, especially for international investors, they don't have alternatives out there. China this morning was talking about the need for prices to actually go up, to stop this cutthroat competition, which is depressing prices. So I think that is holding up US equities as well, lack of alternatives.
All right, Jeff, really wonderful to get your thoughts this morning. Thank you so much for joining us. That is BNY's Geoffrey. And don't miss our live coverage at the ECB Forum in Sintra. So much at stake. Bloomberg's Francine Lockwell will be moderating a panel with President Lagarde, Chair Powell, Governors Bailey, Ueda and Rhee at 9:30 a.m. Eastern. Just want to recap the latest data we got out of Europe just moments ago. Prelim June consumer CPI rising 2%, in line with estimates for the core. Year over year, it was 2.3, helping to solidify we're past June, it's July, a September rate cut from the ECB. We're looking at the dollar trading at the weakest versus the euro since September 2021 at 118. Let's get you some other top stories now trending on the terminal this morning. Standard Chartered facing a $2.7 billion lawsuit linked to the 1MDB scandal. Liquidators for Malaysia's sovereign wealth fund allege that the bank enabled laundering of billions of dollars. Standard Chartered rejected the claims, adding that it cooperated with investigating authorities. Cybersecurity woes are plaguing the U.S. Treasury Department. A Bloomberg investigation found that in a trio of hacks, the Treasury did not deploy cybersecurity measures that could have prevented the attack or flagged the intruders sooner. The findings raise questions about the department's ability to protect sensitive data. Meanwhile, tenants in New York City's rent-stabilized apartments will face a fourth straight year of price hikes. The city's Rent Guidelines Board has approved a 3% rate increase for one-year leases. Tenant advocates argue that the hike will worsen the rent burden. Landlords say the increase, it's too small. Coming up, polling an all-nighter. Senate Republicans face tight margins to get the votes that they need on the one big, beautiful bill. More on that coming up next on your Bloomberg Brief.
I'm confident that the bill is going to progress as is over the next few hours, and it'll be on the president's desk to sign on July 4th. So the Senate will vote, pass it over to the House. We've seen incredible leadership, and this is what leadership looks like.
Secretary Scott Bessent speaking to Bloomberg's Shonali Bassick yesterday, and senators are still voting on that $3.3 trillion tax and spending bill. We're looking live at Capitol Hill as senators there poll an all-nighter to try to get the votes that they need. Joining us also from Washington, D.C. is Bloomberg's Tyler Kendall. Tyler, how likely does it look done that the senators can get this vote through in the early hours of this morning?
Yeah. Hey, Danny. Good morning. Well, they would certainly like to because they've been there since 9 a.m. Eastern yesterday. But the thing is, Senate Majority Leader John Thune at the moment still does not have the votes. And we're still watching closely the same 8 Republican holdouts that we've been discussing at this point for weeks. And the issue is that they broadly do agree about the core tenets of this bill, particularly when it comes to the tax cuts, but there are deep divisions when it comes to the spending cuts. And that really is dividing Republicans at the moment as they try to find a way to push this forward. We should also say that our reporting indicates President Trump is starting to get heavily involved in the negotiations. An administration official does tell us that he has been in constant contact with lawmakers on the Hill. I can say that they have gotten some work done overnight. There were 2 key provisions that we were closely watching. Both of them failed or were stripped out of the bill. One of them would have lifted taxes on the wealthy and would have instead used that money for a rural hospital fund. That was seen as a way to get some moderates on board. That provision failed. And another stripped a provision that would have prevented U.S. states from regulating artificial intelligence. We were watching that because that was actually a priority for the tech sector, and they're likely disappointed with the outcome there. Danny, 2 things to keep your eyes on going forward. There is one provision that could curb Medicaid even further by rolling back the expansion under the Affordable Care Act. That could get some fiscal hawks on board. It's likely not going to pass, according to our analysis at this moment. But the second one, this one really could be the pivotal one that could shape this entire morning. It is an amendment that would ease some of the rolling back of those clean energy tax credits when it comes to wind and solar in particular, giving a little bit more of a lenient timeline when it comes to the phase out. That could ultimately be enough to get some of these moderates on board, because at the moment, Danny, Senate Majority Leader John Thune has already lost 2 votes. He can only afford to lose 1 more.
So assuming that this does get done, Tyler, then it goes back to the House. Are we set up for a collision course in the other chamber?
It looks like we likely are, even though we have heard from House Speaker Mike Johnson all throughout the night that he is urging his counterparts in the Senate not to change this language too much. And really the group that we're going to be watching are the fiscal hawks, because it does appear that the more moderate members, for example, the so-called SALT caucus members, are pretty happy with their compromise to keep that cap at $40,000 just under a shorter duration, 5 years, instead of the 10 years that was in the House plan. So watch closely those House Freedom Caucus members like Chip Roy, for example, who hasn't been afraid to lift his voice before and try to put some sort of urging on this administration. At the end of the day, we do likely think that this could get passed with how the Senate is pushing for more deeper spending cuts, but it might mean that the administration makes some sort of other concessions for either other legislation or executive orders down the line that would either curb spending or be a larger revenue raiser to address the national debt.
Tyler, thank you so much for that. And we'll catch up with you later on in the hour with any updates. That is Bloomberg's Tyler Kendall. So that is a deadline coming, a self-imposed one, be it July 4th. Then July 9th, we get the deadline for reciprocal tariffs. Now, on that, the EU reportedly is willing to accept a trade arrangement with the U.S. that includes a 10% universal tariff. In exchange, the bloc wants lower rates on key sectors like pharma and semiconductors. Our team coverage starts right now. Joining us is Bloomberg's Oliver Crook and Brendan Murray. Oliver, let me start with you on this point of Europe. What are the Europeans asking for? How likely does it seem that the Trump administration will agree to it?
Yeah, well, it sounds like the Europeans are sort of coming to this realization that that 10% tariff is not something that's going to move, which is probably arguably something they should have realized a little bit earlier. I think it's been fairly clear from the outset that that minimum 10% tariff was not something that was really negotiable. We had Emmanuel Macron and some others who were really trying to negotiate for that 0 for 0. It seems that they have finally accepted the reality that that is not going to change. In the European mind, that means an unbalanced trade deal, and it's an unbalance apparently they are willing to accept. And in exchange for that, Danny, what they would like is they would like to see a lowering of the steel and aluminum tariffs, which you know are now at about 50%. Also with the auto tariffs that are about 25%. That could be done either potentially through quotas or some other arrangements that kind of brings down the net figure. But what they also need, Danny, is some certainty on what the next trade regime looks like on the pharmaceutical sector, on semiconductors, on aircraft. Those are the three key sectors for the Europeans. And we know from the Trump administration, they are currently still investigating the questions around that. So you can't really strike a deal and it's only partial. It's like paying, a down payment on something and you don't know what the final price is. That's precisely the situation that the Europeans want to avoid, and they need to avoid it pretty quickly because the deadline is about 8 days away when that 50% tariff would come in between the United States and the European Union on July the 9th.
To that point, Oliver, have the Europeans heard from the Trump administration? Is there a willingness to talk about this?
We do not know the answer to that question at this stage. I think that it is a pretty bad sign that we don't have any of the contours of that conversation so close to the deadline. For example, we talked about the digital tax over in Canada. They sort of pulled that away. There are a number of European countries that have digital taxes. Is that something that is going to be part of the negotiations? We've heard the Trump administration talk about a lot of other non-tariff barriers, VAT, for example. These are all things that have not really been fully figured out as far as we can tell, and we're, just a couple of days away. I suspect, Danny, that by the time we reach July 9th, we're not going to have the full deal. It might get kicked a bit down the road.
Well, Brendan, trade negotiations are happening elsewhere, too. It seems like Japan, even though it was one of the early out of the gate, and the Trump administration had early on said, if you were one of the first to negotiate with us and not apply reciprocal tariffs, we'll work with you. But they seem to be at a loggerheads. What is the latest between those talks?
Yeah, exactly. It was just a couple weeks ago that the Trump administration officials were saying Japan was close to the front of the line for its trade deal. But now it looks like it's kind of falling back in that line. And whether they can bring it over the finish line is a real question now, given the tone of the rhetoric that we're seeing between President Trump and Japanese officials. President Trump posted on True Social that he was not happy about the American rice exports that can't penetrate the Japanese market. So obviously agriculture is a big sticking point. The real issue between the U.S. and Japan is cars. Most of the U.S. trade deficit with Japan is involved in cars, and Trump wants to see more of that production reshored. Japanese officials would argue that Honda and Toyota already produce a lot of vehicles in the U.S. and that they have invested billions and tens of billions of dollars in auto manufacturing in the U.S. So we're coming down to crunch time. Japan faces these lower house elections in a couple weeks. They're kind of dragging their feet, blaming the elections and the political pressure that would come with those. And they're not looking to give too much if you listen to the tone from President Trump.
Crunch time for all. Brendan, just quickly, does it seem like we're about to enter a period of a flurry of deals, or is it can kicking?
Yeah, exactly. I think there's going to be a lot of officials, including Europeans, in Washington between now and the end of the week. Of course, it's a holiday shortened week. Then you have a couple days next week where this could spill into. So I think we're going to see the best final offers put on the table from all of these countries that we think are close, from Japan to South Korea to Taiwan to Switzerland to the European Union. All of these are going to come to the White House, to the Oval Office, on the president's desk, and he's either going to sign them or he's going to kick them back and say, no, here's your reciprocal tariff, or maybe we'll delay for a while and negotiate a little longer.
Brendan, Oliver, thank you so much for your coverage this morning. That is Bloomberg's Oliver Crook and Brendan Murray. Coming up, we're going to take a look at the biggest headlines around the world, including a robotic milestone for Amazon. We'll have your front pages next. You're watching Bloomberg Brief. You're watching Bloomberg Brief. I'm Danny Berger in New York. Let's take a look at the front pages and what the major publications are running with for their headlines. First up in the Wall Street Journal, Amazon approaching a new milestone. It will have as many robots as humans in its warehouses, deploying more than 1 million robots. Around 75% of Amazon's current global deliveries are assisted in some way by robotics. Next up, a Bloomberg exclusive. Apple is weighing using outside AI tech to power Siri. Sources say Apple is considering using tech from Anthropic or OpenAI. The option would sideline its in-house model. And the New York Times leading with California, rolling back its landmark environmental legislation. Governor Gavin Newsom signed 2 bills that scaled back the 50-year-old law, which had been blamed for blocking development and exacerbating the state's housing shortage. Newsom had threatened to reject the state budget unless lawmakers rolled back the California Environmental Quality Act. Coming up, the dollar posts its weakest first half of the year since the 70s as Treasuries and equities rally. We're going to discuss these markets with JPMorgan's Kelsey Berro. That's coming up next. Stay with us on your brief. It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know. The Vote-A-Rama continues. Senators poll an all-nighter on the $3.3 trillion tax and spending bill. 8 days until the trade deadline. The EU pushes to negotiate while President Trump threatens to up tariffs on Japan. And an all-star lineup in Portugal. Powell, Lagarde, Ueda, Bailey, and Rhee all set to speak at the ECB forum in Sintra. An all-time high on this equity market yesterday, falling an all-time high the day before. 3 consecutive gains, though, takes a breather this morning with futures lower by about 0.2%, a little bit more for the NASDAQ, about 1/3%. When it comes to this Treasury market, though, the rally continues. It was the best quarter for Treasury since February, the best first half of the year in 5 years. We're down a basis point in 2-year yields. 10-year yields down by 3 basis points, just over 419. Let's look at some of the individual stocks moving this morning. Here with that is Joe Easton. Hey, Joe.
Hey, Danny. So I've got significant weakness in Tesla in the pre-market today. We're down 4.8% at the moment, heading close to down 5%, underperforming the rest of the Mag 7. This because the squabbling between Musk and Trump continues. Trump writing on social media that Musk has had more subsidies than any human in history, and that is hitting Tesla's shares today. He's given some pretty mean comments online towards the owner of Tesla, and therefore that is weaker in the market. Then we've got a couple of crypto-linked stocks. Firstly, Circle Holdings. This one we've had on the radar for a while. One of the big performers of the year, in fact, and actually getting an added boost as the company now looking to get potentially a banking charter, so moving further into the banking space. And we had a big gain in that stock yesterday, extending it today as well, up another 1.8%. Then finally, Robinhood, this one looking pretty strong as well. The company is going to start tokenizing equities on the blockchain, so people in other countries are going to be able to go onto the blockchain, buy other assets, including stocks via Robinhood. A lot of excitement around that, a lot of excitement around the blockchain link. Robinhood up 3.3%, heading towards the open of trading, Danny.
Joe, really appreciate it. Joe Easton there. Now, elsewhere in the world of real currencies, away from crypto, not that it's not a real currency, the U.S. dollar saw its weakest first half of the year, judged by the DXY, since 1973. JPMorgan's Kelsey Berro weighs in, writing, quote, we differentiate between sell America and continued U.S. dollar weakness. Foreign demand and participation in the U.S. bond market remains robust, but FX flows suggest more foreign investors are hedging their currency risk back to their local market. Joining us now is Kelsey Berro, fixed income portfolio manager at JPMorgan Asset Management. Sorry, Kelsey, I just realized I'd probably get a bunch of angry people writing me and being like, crypto is a real thing. So I had to start there. I think this is a really interesting distinction, though, because from the damage we saw after the April tariff day, you saw stocks bounce back at all-time highs. Treasuries come back to a really strong quarter, but the dollar has perennially been under pressure. So to what degree is that a persistence of sell America versus something different?
Yeah, so I think we do have to differentiate between the currency moves and the underlying assets. And the demand for underlying fixed income has remained very strong so far year to date, despite all the fears of sell America. Whether it be looking at the Treasury auction data, end user demand across the curve, pretty much in every maturity point, with the exception of the 20-year, is stronger now than it was before April 2nd. You look at the credit market, also demand remains robust. Part of that is because we have the most liquid, deep markets. There's limited alternatives, but part of it is also because there's still a lot of opportunity and there's also a lot of income. One of the reasons why returns in bond markets are so strong in the first half of the year is not necessarily because of a lot of a capital appreciation. It's because you've been able to collect carry and there is high starting yields in fixed income again.
There was this narrative, though, that after April was just that the volatility in itself would scare some international players off. Bloomberg, though, did have an interview this morning in Asia with one of the Korean sovereign wealth funds, basically saying we're still buying treasuries and the volatility didn't scare us off. Why hasn't the volatility been an issue?
Right. Well, I think they're still buying treasuries, but here's what has changed, or what we're looking to change over time, which is how much of the FX risks are they hedging back? So what we're looking at are non-U.S. pension funds and the percent of their portfolio they hedge back into local currency. And even now, as you are starting to see more interest to hedge back the dollar risk, so to take less outright U.S. dollar exposure, hedge ratios are still below 10-year averages for most of these non-U.S. large pension funds that we follow. So this trend of strong fundamental demand for U.S. fixed income but weak U.S. dollar can continue.
It is interesting because as equities have rallied, treasuries have rallied, and it feels like that correlation has gone back positive. But the correlation hasn't been positive with gold. As equities have rallied, gold has kind of been flat. Is there a change where gold has really taken the place of treasuries as the diversifier for risk assets in a portfolio?
I'm not so certain. I mean, I think that there has certainly been interest in gold this year, and it's one of the pieces of a diversified portfolio, but it doesn't replace your core fixed income in your portfolio. It doesn't have any income. It isn't linked to any underlying activity or asset. I think what we're more focused on are some of the other parts of the commodities markets, which have bigger impulses for things like inflation, for example. So one of the challenges with the bond market is always inflation, right? And just a few weeks ago, we were concerned about the Middle East and the possibility of seeing $100 oil again. But when you look at the supply-demand balance within the oil market, it says actually the risks are balanced to the downside. We have seen, outside of the tariff impact of inflation, which we do expect to see, a fairly benign inflation backdrop. Again, good for, holding income and holding carry in portfolios.
Is there a risk that the deficit upsets all of this, that you get more spending out of D.C., you get higher costs on interest, you get financial repression, high inflation, something like that? Is there a real risk, Kelsey, that something like that comes to fruition and the market actually reacts to it? Because the vote-a-rama is happening in D.C. tonight, and this is a bond market that feels quite unbothered.
Yeah, I think it's unbothered because we've had a number of weeks and actually months to prepare for this. So I would say, yes, the deficit is influencing the bond market. It's influencing the steepness of the curve. It's influencing how high long and real yields are. But I would say probably the majority of that shock factor has already been priced in. And I think you would need to see a significant surprise in terms of what the ultimate bill that passes through the Senate and then goes back to the House and hopefully gets through the House to really get the market surprised. Normally what happens is when the data is good, everybody cares about the deficit because the data is good. There's nothing to worry about. When the data starts to roll over, the deficit goes out the window and the market, focuses on the fundamentals. And so this week, I would say it's really more about the labor market data that we're getting on Friday. That's what I think is going to be the major driver of the bond market and particularly Treasury yields. Well,
we'll get the labor market data on Friday. We'll also get CPI later in July, too. Mm-hmm. We also have, again, this big, beautiful bill deadline. We have the trade deadline. When you look at the risks that are facing us in July, it is a lot. Is it a kind of market you want to be defensively postured because of the risks ahead?
Well, I think you want to balance continuing to have high quality carry in your portfolio. So owning credit, investment grade credit, owning securitized credit, having some high yield in the areas where, you're comfortable with. But also there's probably some advantage of having some intermediate duration in your portfolio as a hedge against some of the risks. Particularly, I think the risks of a greater slowdown in the labor market, which pushes the Fed or pushes the market to price in a more aggressive Fed.
All right, Kelsey, a lot to chew over the next couple of weeks, and it's in the summer when we're all supposed to be relaxing, so lucky us. Kelsey, thank you so much for joining. That's Kelsey Berro of JPMorgan Asset Management. And by the way, speaking of central banks, don't miss our live coverage of the ECB forum in Sintra. Bloomberg's Francine Lockwell will be moderating a panel with President Lagarde, Chair Powell, and Governors Bailey and Ueda and Rhee at 9:30 a.m. Eastern. All right, let's quickly get you some top stories trending on the terminal this morning. Standard Chartered facing a $2.7 billion lawsuit linked to the 1MDB scandal. Liquidators for Malaysia's sovereign wealth fund allege the bank enabled the laundering of billions of dollars. Standard Chartered rejected the claims, adding that it cooperated with investigating authorities. Cybersecurity woes plaguing the U.S. Treasury Department. A Bloomberg investigation found that in a trio of hacks, the Treasury did not deploy cybersecurity measures that could have prevented the attacks or flagged it sooner. The findings raise questions about the department's ability to protect sensitive data. Meanwhile, tenants in New York City's rent-stabilized apartments will face a fourth straight year of price hikes. The city's Rent Guidelines Board has approved a 3% rate increase for one-year leases. Tenant advocates argue that the hikes will worsen the rent burden. Landlords say the increase is too small. Coming up, we'll bring you to our Bloomberg scoop on how Apple is looking outwards to try to stay ahead in the AI race. That's coming up next. Stay with us. This is Bloomberg.
I'm confident that the bill is going to progress as is over the next few hours, and it'll be on the president's desk to sign on July 4th. So the Senate will vote, pass it over to the House. We've seen incredible leadership, and this is what leadership looks like.
Treasury Secretary Scott Bessent optimistic as ever on getting a bill passed. And Senate Republican leaders are still scrounging around for votes to pass President Trump's $3.3 trillion tax bill. Voting started at 9 a.m. yesterday. And yes, you're looking at frozen-ish, but live pictures of Capitol Hill with the votes still ongoing. And also up in the early hours from Washington, D.C. is Bloomberg's Tyler Kendall, who's back with us. Tyler, does this vote look like it's headed to success for the Senate Republicans?
Yeah, hey, Danny. At this point, it's a little too early to say because Senate Majority Leader John Thune still does not have the votes to get this over the finish line. And when we look at the math, he can only afford to lose 3 Republicans before he has to call in Vice President J.D. Vance to cast that tie-breaking vote. And we already know of 2 likely no's. One is Senator Tom Tillis, a Republican from North Carolina, who has raised concerns about what changes to Medicaid, as well as the rollback of clean energy tax credits could mean to constituents in his states. And the other there is Senator Rand Paul of Kentucky, who won't vote for any legislation that lifts the debt ceiling and wants to see deeper spending cuts. And that division really illustrates what Leader Thune is dealing with at the moment. He has pretty broad support when it comes to the main priorities of this package, including extending the 2017 tax cuts. But importantly, there's really deep divisions when it does come to those spending cuts. Now, I pointed this out earlier on the program, but there's one amendment in particular that we are closely tracking. It has yet to come up, but it would see a more lenient timeline when it comes to the phase out of clean energy tax credits related to wind and solar. And that really might be enough to get enough moderate Republicans on board. But at the minute, it's a little too soon to say, because John Thune is still trying to make some of these backroom deals in order to get enough Republicans to get this bill over the finish line.
Well, some of those clean energy phase-outs might have invoked the ire of Elon Musk, and we've seen a real clear spat between him and President Trump on X. Most recently, Trump writing on Truth Social that Musk may get more subsidies than any human being in history so far, and that Elon would probably have to close up shop and head back to South Africa without subsidies. Tyler, is this just palace intrigue, or could this have real ramifications?
Well, I think it's probably a little bit of both. One, this is starting to veer into the personal again, with President Trump also appearing to threaten in his post on Truth Social that there should be some sort of investigation because Elon Musk has benefited from government subsidies. He also said that he made clear to Musk when they started working together that he had long been against the tax credits under the Inflation Reduction Act, which we know was considered to be a main policy priority for the Biden administration. But when we actually look at some of the tangible ramifications here, we did get one indication that the money really is starting to flow from both sides. President Trump has threatened to primary Thomas Massie, a Republican from Kentucky in the House, who has said that he will not vote for this bill. And he actually did make good on that promise. The political arm of his campaign operation launched a super PAC against Thomas Massie. But then we had Elon Musk yesterday confirming that he donated to Thomas Massie's campaign, really putting their money where they're saying that they would. And that's going to be a really interesting dynamic to watch if we see money flooding in from both sides. Because, Danny, keep in mind, Elon Musk contributed more than $290 million during the 2024 cycle to both the White House race, but also to congressional races, which made him the largest U.S. political donor during the cycle.
Money going into various campaigns, going out of Tesla shares this morning. Tyler, can we just wrap it up? Because we also have this July 9th deadline coming for trade. Does it seem like there has been progress? Will we get a flurry of deals or just more can kicking?
Well, if you ask the administration, they keep pointing us to the fact that they need to get this legislation over the finish line by July 4th, and then we could expect some trade deals to come after that. And they are telling us to be prepared for framework deals before July 9th. Of course, these wouldn't be fully fleshed out deals, as you well know. These would really be frameworks and perhaps give us some sort of insight into what commitments would look like down the road. Now, a person familiar does tell Bloomberg News that it appears that we are nearing trade pacts with some of those economies in Asia that we know have been prioritized because they are geographically close to China, including Taiwan and Indonesia. A person familiar also adds that we could be approaching some sort of pact when it comes to Vietnam and South Korea. But Danny, as you well know, we have been getting an update for one of those trading allies that doesn't appear to be on the right track when it comes to President Trump's expectations for trade negotiations, and that is Japan. President Trump is threatening to send a letter setting an effective tariff rate for the country, as it appears that negotiations are going a little bit off the rails there.
Tyler, thank you so much for your coverage this morning. We really appreciate it. A long day ahead for you, I am sure. Tyler Kendall in Washington. Now let's get you to a Bloomberg scoop. Apple is considering using AI tech from Anthropic or OpenAI to power a new version of Siri. It's a move that would sideline its own in-house models as it looks to turn around its flailing AI effort. Joining us with the latest on that scoop is Bloomberg Tech Europe anchor Tom McKenzie. Tom, it was a story that seemed to spur Apple gains late in the day yesterday. So is this success for Apple, or is it admitting defeat?
Yeah, the Mark Gurman scoop, of course, on this story, suggesting that Apple is now working and has been working with Anthropic and OpenAI in terms of whether or not they integrate these large language models, these foundation models from both companies, one or the other, into their products, and specifically into Siri, which they expect and hope to launch in the spring of next year. Is it good news for Apple? On one level, this is a seismic turnaround for a company that, of course, famously likes to hone the whole tech stack. And if it gives the foundation model priorities over to OpenAI or Anthropic, then it's giving up, arguably, that key piece of that tech stack when it comes to AI. There is a debate within Apple as to whether or not to go ahead with this, but we know both Anthropic and OpenAI have been asked to train their models on Apple's own cloud infrastructure. There is a clear gap here, and this is the acknowledgement from Apple. There is a gap in terms of the catch-up that is needed with Android phones and the AI assistants that are already embedded on those phones, and what is needed with Siri and the assistant there on Apple phones. There is a key gap. They haven't managed to close it with their own Apple Foundation model. Now they're looking at alternatives. It's created divisions within Apple, but they will hope, of course, those proponents of this measure, they will hope that this will allow them to embed technology that allows that catch-up to happen and happen quickly. Haven't yet fully decided on this. The debate continues, but it has been taken very seriously.
Tom, elsewhere, it just seems like a market that is happy and maybe welcomes a lot of spending when it comes to AI. We also learned that Zuckerberg has been debuting or has debuted his Meta Super Intelligence Group. What do we know?
Yeah, so all of their AI efforts at Meta now will come under this group, the Meta, as you say, Meta Super Intelligence Labs, or MSL. It will be headed up by Alexander Wang, formerly the CEO of Scale AI, that Meta invested a little over $14 billion in. So Alexander Wang being propelled to the top of the AI efforts. Under this lab then, under this unit, this specialized AI unit, will sit research, will sit large language models, will sit AI products, all of that coming under that remit. Mark Zuckerberg saying this could be the greatest transformation for humanity. Super intelligence, intelligent AI that is as capable or more capable than humans. He's been going out there looking for that talent, signing checks of $10 million to $100 million for talent from OpenAI, from Anthropic, from Google DeepMind, to try and embed them into Meta's efforts. There's a catch-up story here as well for Meta, because Mark Zuckerberg hasn't been pleased with their latest models and the fact that they haven't achieved some of the technical achievements and metrics that he was hoping for. This is a significant reminder that Meta and Mark Zuckerberg specifically is all in on this bet around superintelligence.
Such fascinating developments with so much money behind it. Tom, thank you so much. Bloomberg Tech Europe anchor Tom McKenzie. Coming up, we're going to set you up for your trading day. We have economic data and a lot of central bank talk. We'll have the latest for you and what you need to pay attention to. This is Bloomberg. You're watching Bloomberg Brief on this Tuesday morning. I'm Danny Berger in New York. Let's get you set up for this trading day. We're going to have a panel discussion with Chair Powell, Presidents Lagarde, Governors Ueda, Bailey, and Rhee. All of that coming from the ECB forum in Sintra, 9:30 a.m. Eastern. Conversation you don't want to miss. We're also going to get PMI data. That comes out at 9:45 and 10 a.m. Plus JOLTS. Those numbers come out at 10 a.m. All right, some individual stocks on the move. Tesla, one of the big ones to the downside this morning. President Trump threatened on Truth Social to withdraw government subsidies from Musk's companies, with Musk criticizing the tax bill. Those shares down to 4.6%. Wynn Resorts, those are up nearly 3%. It's higher alongside Las Vegas Sands and Macau casino revenue for the month of June rose 19%, way above the estimate that was just over 9%. Both the firms have about half of the revenue exposure to Macau. Meanwhile, Robinhood, that's also extending gains at a double-digit closing price yesterday. The firm is tokenizing U.S. securities available to customers in 30 countries, 24 hours a day, 5 days a week. So congrats, you can trade literally whenever you want. Maybe you want to trade this morning. Let's take a look at the euro strengthening more against the dollar near the highs of the day, and it is the strongest versus the dollar since September of 2021. We got European area CPI data in. It was in line 2%, allowing the ECB likely to cut in September, whereas we're unsure whether we'll get that from the Fed. It was the worst first half for DXY since 1973, despite all-time highs for equity markets. Equities, though, slightly taking a breather this morning. All right, that's it for your Bloomberg Brief. Surveillance takes things from here, and you're watching Bloomberg.